If you are looking for the front page of DeFi, look no further than Zerion.io. Zerion is your home base for managing your DeFi portfolios. Zerion offers a central place for you to engage with all of the DeFi protocols and assets that you engage with on a daily basis, but all in one central spot. Here you can see I've loaded up a wallet, and Zerion is giving me the portfolio performance of all the assets in this wallet over time, as well as a breakdown of all the assets that I own, as well as all of my transaction history that I've ever done in an easy to view fashion. Zerion also lets you invest right into DeFi's best yielding financial opportunities right from their homepage. Zerion also makes it super easy to access interest in DeFi using applications like Compound and Aave in the background. And you can also exchange your assets using the Zerion app using an exchange aggregator in the background to make sure that you always get the best rates. You can even use the Zerion mobile wallet to add your MetaMask or Argent or another Ethereum address right into your mobile wallet so you can see your portfolio and engage in DeFi on the go. Here I just loaded up my Argent wallet, and now I'm going to load up my MetaMask as well. And Zerion will do the same thing. It will add all of my assets and wallets together all in one space and give me a portfolio summary of what's going on. Adding wallets is trivially easy. If you already have a MetaMask, you can get it right into the Zerion app, and it can sync with your desktop app as well. And the best part is you can also buy Ether right into the app itself. Use the Invest tab to look at all the things that you have invested in, as well as other opportunities. And coming soon to the Zerion app is the ability to buy and sell your assets straight from your mobile device as well. So download the app. It works on iOS and Android. Go to Zerion.io, plug in your wallets, and get a historical report of your portfolio over time, as well as a comprehensive breakdown of all the assets that you own and how much yield they're generating for you. We're also brought to you by MONOLITH. MONOLITH is your cool new DeFi account, your DeFi savings account, your DeFi checking account. Except the cool thing about the MONOLITH DeFi account is that it gets software updates, right? You actually get to increase the usefulness of this over time. So here are some of the features. MONOLITH is a smart contract wallet with a lot of the features that you would expect if you've come to know DeFi and what it is. You can add money to it. You can put that money to work in Compound and accessing yield. But you can also swap through Uniswap. What was cool with MONOLITH is that they will send you a very sexy MONOLITH Visa card that connects to your MONOLITH smart contract wallet on Ethereum. So it's a really awesome tool to live a bankless life with a savings account that gets software updates. So this is something that you're never going to find out in the real world, but you can still do real world things with real money, like buy your groceries. So that's just fantastic. Coming soon to MONOLITH, actually already here to MONOLITH, is now you can buy DAI and get it sent to your wallet directly, right? So it's also being an on-ramp. So you don't have to go through your centralized exchange like Coinbase or Gemini or wherever. You can just go straight from your bank account right into your MONOLITH checking account smart contract wallet. So check them out at monolith.xyz. All right, Bankless Nation, I am here with Dan Elitzer. Dan is one of my favorite people in the crypto space. He knows what's up. He sees what's coming first, and he has guided my attention into things that turned out to be really big deals in the end run. And so I have a lot of respect for him. I pay attention to what he pays attention to, and so I'm super stoked to get him on the Bankless show to meet the nation. Dan, welcome to the nation.
Thanks for having me, David.
So,
always fun.
It's always fun. It's always a good time. Yeah. So Dan, we were going to do a recording so you could help me understand empty set dollar. And that's absolutely what we're going to do today. But today of all days is the day that you have debuted Nascent. Maybe we should start there. What is Nascent?
Yeah, thanks, David. So Nascent is a newly launched crypto investment entity. We focus on early stage venture, but also many other strategies within crypto. And we focus largely on any crypto related businesses, open finance, DeFi, however you want to define it. My specialty, my preference is working with teams at the very earliest stage, but we have the advantage of using all internal kind of permanent capital. And so we're able to take both a very long-term view on the industry and on the opportunities, while also remaining incredibly nimble in terms of how we operate to be able to best capture those opportunities as they arise.
Right. So DeFi Summer 2020 was a crazy time. And that seems to be a time where venture capital seem to kind of be sitting, forced to sit on their hands, because with organizations, there's bureaucracy, there's rules, there's things that have to happen. And by the time that, you schedule a meeting to discuss a strategy, perhaps things have moved on. It sounds like Nascent is trying to be able to respond to an ever-changing, rapidly changing environment in your guys' structure. Is that kind of the ethos that you guys are trying to build?
That's right. And I would say that, this is the second fund that I've been part of creating. So at IDEO Collab Ventures, when we were getting that off the ground, the conversation at the time when we were starting to think about this late 2017, early 2018, was really around, do we do a hedge fund structure or a closed-ended venture structure and the different advantages? But people were really just thinking about like, well, are we just buying like kind of equity or SAFTs at the time? Or are we going to be able to touch more liquid assets, essentially like, buying and selling liquid assets? And since then, things have changed so much, right? The idea of participation in these networks as a liquidity provider, as a yield farmer, as a keeper, playing all these different roles, it just evolves constantly. And so if you have to deal with raising money from LPs who have certain expectations about having a very specific strategy they're signing up for and that they're going to be in for a number of years, and all the different kind of regulatory requirements and things that go with meeting terms of your agreement with your limited partners, with your investors. It's just really hard to be responsive. And so I think, IDEO Collab Ventures is one of the best venture funds in the space. Really excited about what they've done so far, what they're going to be continuing to do. And I know they're also making some plans to add more flexibility into future funds they may do. But Nascent is really just built from the ground up to always have this flexibility, always have the ability to be nimble, but also take a long-term view, and really to align incentives, right? So there's often these games that you're incentivized to play whether you want to or not when you have external capital, right? You're thinking about like, well, how do I show these markups and show that the portfolio value is, going up and to the right as quickly as possible. And we don't really have to care about that, right? Because that it lets you raise the next fund, whatever. For us, we're not raising a next fund. And so we don't care about marking up investments. We care ultimately, we want to, be able to have exits, but we're able to take a long-term view on that. We know how we view these things internally. And so it's not about what somebody externally might want to mark them to for different purposes. We're trying to grow our own capital in the best way possible over the long term.
So what about the market that has emerged in 2020, the market as we know it? How has that guided the design choices behind the fund, or like the ethos behind the fund? I'm assuming a lot of what came out of DeFi Summer 2020 has really impacted how you want to operate with Nascent. Can you illustrate that story for us?
Yeah, well, I'll say, it certainly has affected how we've looked at kind of immediately some of the activities that we want to be participating in. But when we started talking about this, even kind of before a lot of the craziness happened, there was already this sense that we needed to have maximum flexibility. And so we needed to structure with that in mind. That said, doing recently has been related to yield farming type activities. And I think there's different types of yield farming. And I think we're starting to see how that's evolved, where it goes from less very short term, dump a whole bunch of tokens out there, crank the liquidity early, and then like what happens after that, to teams being more thoughtful and maybe making stuff that doesn't seem as attractive to pure short term profit motivated farmers, and really to try to get the right community around it, the right long term investors, with kind of lockups or vesting, as you would do with a traditional venture round, but really applied to folks who are investing their capital directly into the protocol as well. So we've structured to be able to do both things very fluidly. Venture, I want to emphasize, that really is at the core, right? You see some firms that have done some very impressive trades and have started getting into investing as well. Three Arrows, CMS, some folks like that, Alameda. But they're primarily traders, and they kind of layer on venture. We really want to emphasize our core, right? Sid Ramesh on our team, also an operator early on with Dharma and growth there, worked with DYDX, Value, some others. we want to help build stuff early. And so the trading is more in service of what we're doing on the venture side rather than the other way around. And so, I think that's one of the things that we hope will differentiate us, is that we're going to get in there in the weeds, help you build, and our other activities help inform what we're able to bring to the table there. Plus, we've got some folks like, for example, Notional does fixed rate lending, and we participate in some of their kind of beta liquidity mining program that they're doing, where they don't want to like blow this out to everybody. And we said, hey, look, we're gonna support you no matter what. Like, this is part of our value add, is that we're gonna do this. We get additional tokens as reward. Great, that'll ramp up the amount of capital we can justify putting into this, but it's just kind of table stakes in terms of how we like to participate with our portfolio companies.
So when a project comes across your desk, so you can review it, what are the characteristics that that specifically Nascent is really looking for? What are the projects that would resonate with the ethos at Nascent that might not be fitting for other firms in the space or other venture funds in the space? Like, what are you guys really looking for when you are sifting through the projects to deploy capital at?
Yeah, well, I don't want to necessarily that there's things that we're looking for that other venture funds aren't, because I think most of them tend to look for stuff that's at least in the same ballpark.
Right.
Kind of getting to the other topic that we initially set this up to talk about was Empty Set Dollar. That's a project with a pseudonymous founder that didn't raise any capital and just kind of launched it out into the world. And we were able to go and participate and end up building up a stake relatively early on. But that's something that I think a lot of funds would say, like, oh, well, there's no investment opportunity here. So like, how we're going to wait and see. And like, when it gets larger and more liquid, we can invest in it as we would in Bitcoin or ETH or something. But we saw, no, like, this is a very promising project. We like how it's being built. We like how it's designed. We see the opportunity to get involved early and to help influence the culture and the governance discussions very early on, because it did launch really decentralized, pure on-chain governance from day one. And so that was very intriguing to us. And you need to be comfortable getting in and really getting in the weeds with these projects and participating in governance. It's part of diligence. It's part of helping them succeed. That kind of goes beyond what you can often do with a more traditional company structure, where they've got very even hierarchies even exist in startups. But when you really do have an open thing that anybody globally can participate in from day one, if you want to help nudge it towards success, then you really have to pay a lot closer attention, because it's not just going to be the founding team that is in there. It's really anybody on the internet can hop in the Discord server and start spouting their ideas and their opinions, or even pushing proposals live on chain.
Right. Maybe that is kind of the answer that I was looking for with, like, because Nascent and projects that came out of DeFi Summer 2020 are very atypical, right? Where like you have to be comfortable with like nebulous leadership and nebulous organization. And it seems to be Nascent is looking to be included in that nebulous organization, right? A part of the community that builds these things out.
Yeah, and that's one of the things that we've talked a lot about. And to be honest, we haven't figured out exactly how to do it yet, but we want the boundaries of our organization to be a little bit more fluid, right? As they tend to be in crypto, right? That there's not just you're on the team or you're not.
Right.
Community members can have various degrees of involvement and participation. And we want to sort of mirror that with our own structure and our own organization over time. But we also don't want to start doing everything all at once. We need to start walking first and build up to a good run.
Absolutely. So let's get into Empty Set Dollar, because I want to know what it is. So what is it?
Yeah, great question. So Empty Set Dollar is, I would say, an algorithmic stablecoin. So folks who may have been around in kind of 2017, 2018 era may have recalled a project called Basis that was using a seigniorage shares model, this idea of being able to mint dollars, the digital dollars that will stay closely pegged to the dollar, but like the dollar itself, doesn't have anything really backing it. right? But it uses this kind of algorithmic methodology to hopefully stabilize that price over time. And Basis never launched. They had a lot of, I think, regulatory concerns. Even though they raised over $100 million, they never actually made it into market.
And they had to give like, I think 72% back, I think is what
I think it was
they
even
ended
more
up.
than that. I think they just gave like basically all of it back.
Right.
But interestingly, they weren't using that. And you know, kudos to that team. From what I understand, like they weren't going out and like having like lavish parties and things like that and paying themselves huge salaries. Like the intention for most of that capital was to provide a backstop. So it wasn't like a fractional reserve thing where your basis coins were going to be backed by those dollars. It was saying like, hey, you know, if the price goes down below a certain level, we'll step in and help backstop it, try to push it back up. And I do think that concept has a lot of value to it. And so one of the topics in the empty set dollar Discord and the community there has been, is there a way that in a decentralized manner without raising money from investors, can we somehow build that over time? And I think that's a really cool discussion. It wasn't even the founder who suggested that. It was one of the community members who came up with that proposal. And there've been a number of different ideas of ways to do that have been getting kicked around. It's something that started, was it like about 3 months ago, I think, that this project launched. And it was all, you know, open source from day one on GitHub, you know, front end hosted on IPFS, and honestly, really wonky UI. It's, you know, not super accessible. And the founding team, they never really tried to like hype this, right? They actually reached out to builders and people in the community who they've seen engage in really constructive ways on other projects, and basically was like, hey, we're doing this cool thing, you should check it out. And then a number of those people did, and were able to, you know, basically there's an advanced function that kind of moves the protocol forward that you can call every 8 hours. And it's just kind of whoever gets there first. But early folks came in with the right ethos, and they said, look, I'll advance it once, and get a piece that then compounds over time, but that they weren't trying to like grab all of it. And so, you know, there is a bit of a top heavy distribution. It's flattened out a bit over time. It will continue to do so as more distribution happens.
When you say distribution, you're talking about the actual stablecoin?
The actual stablecoin. Yeah. So the interesting thing, one of the big differences here for empty set dollar versus the kind of bases and senior shares model is that was a 2-token system where there was like a stable coin and like a share token. And when there were more of the stable coin needed to be printed to like kind of push the price back down, it was the shareholders who would receive it first. In empty set dollar, there's just a single coin that's meant to be the stable coin. And if you want to receive a share of inflation, in the case where more needs to be printed, you bond it in the DAO, or you stake it in kind of Uniswap LP shares, ESD, USDC LP shares. You stake that. And there's currently kind of inflation is currently split 80-20 between the DAO and the kind of staked LPs.
Okay, so this starts to get to what we're pretty familiar with from DeFi Summer. When you said algorithmic stablecoin, my mind went to Ampleforth, where it would rebase according to a rule. It sounds like that's not what's happening.
Well, it inflates and potentially sort of deflates according to a rule, but it's not like you had, you know, 10 ESD in your wallet, and then something happens, suddenly you've got 20 ESD, or you've got 5 ESD. It doesn't do that rebase thing. If you bond, when more gets issued, you get more issued kind of to you in the DAO. It's kind of like if you're holding a compound C token, right? You now it's now worth more. You kind of have, you pull out, you end up having more when you pull out. But with EST, the nice thing is it's a standard ERC20. And so unlike Ampleforth and all these rebasing things like, you know, YAM and other things like that, it plays nice with other DeFi protocols, right? You don't have to worry about doing some special considerations to allow it to be added into lending pools or, you know, LP pools where it breaks things because of the rebase. This can be in there. You're not going to earn rewards if you're just, you know, in some random pool or lending protocol, but, you know, at least it's not going to break things.
Okay, so let's go through the mechanism of when is it called an empty set dollar? One empty set dollar? So
one ESD is usually
one
how it's
ESD.
referred
Okay,
to.
so let's say that ESD is trading at above $1.02. How does the system equilibrate?
Yeah, and to be very clear, a lot of the parameters of the system it's very early, and so they're in flux. Governance is looking to tweak them. So currently, if it's looking at the price based on an 8-hour TWAP, time weighted average price, drawn from this Uniswap liquidity pool. And so it's pretty robust, right? It's not like these flash loan attacks where they're looking at the curve price in the block.
Right.
This is over an 8-hour period. So if someone tried to manipulate
it
would be incredibly expensive to try to do that. So if the TWAP says it's $1.02, like that's pretty reasonable. And at that point, we would see there's currently, I think, a max of 3% expansion or contraction for a given period. And so this would be equal to a 2% expansion of the total supply. 80% of that would be split equally among all the ESD that's bonded in the DAO, and 20% would be split equally among all the LP shares that are also staked or bonded.
Okay, so the units is trading at $1.02 on Uniswap, which is where we get the price oracle from. Then people that are providing liquidity to that same Uniswap market are rewarded with extra 2% of average of the.
Well, they're going to get 20% of that 2% expansion. So
20% of the 2%, right?
What we've typically seen happen is on a kind of total value locked basis, I think the LP shares typically receive about half the reward of what the bonded ones have, is kind of where people have tended to equilibrate.
Okay, that makes sense. And so are those extra units that are minted injected into the Uniswap pool directly?
No, and that's what makes it safe. Is that look, it's all DeFi. Nothing's safe, right? But like,
safe.
it's safer than a rebase in terms of the problems that it potentially create. It's put into this kind of essentially reward pool for your accounts, and to be able to claim that, you need to then unbond your LP shares.
Okay.
So first, just being in the liquidity pool doesn't earn you rewards. You need to take those LP shares and stake them, as people have gotten kind of familiar with doing. Yes. But then it goes into this kind of reward bucket. Okay. And you need to unbond, and you can immediately rebond your shares, but unbonding them kind of moves them to this claimable phase. Now, there's currently essentially a 5-period lockup. So 5 of these 8-hour periods before you can actually then withdraw from claimable and take it out. If you want to, if you're not during that 5-hour window, and you have rewarded ESD, you can actually provide that straight into more LP shares by pairing it with an equivalent amount of USDC based on the current price, and just pushing that in. And so that's a mechanism to encourage people to take those rewards and add them back in as additional liquidity. It's going to take a little bit longer to kind of get them out and kind of restrict your movements a little bit more if you're trying to just straight pull them out.
Sure. So the way that the unit stabilizes at $1 results from people pressing the sell button, right?
Yes.
And we are just, if the empty set dollar is constantly above $1, people that are pressing that sell button just continually get more ammunition to hit that sell button until the unit falls back down to $1. Right.
Right.
Okay.
So that's the idea.
Let's do it in reverse. So let's say it's trading at 98 cents. How do we encourage people to, I'm assuming, hit a buy button?
Yes. And what I want to make clear is, this is very, very early stage product. And so while the hope is to be pretty tightly in that range, I would say like a DAI-like tight range around the $1, where it's not maybe exactly $1, but it's pretty close. The project has spent significant periods of those 3 months not in that tight range. It's gone meaningfully above, it's gone meaningfully below.
Yeah,
and so
well, also has buy before, so
yeah. But I mean, like, looking right now, the current spot price is 88 cents. The current TWAP is 84 cents.
Okay.
And so we do see that it's not super tight right now, and it spiked up above. I mean, I think it was above like $2 or $3 at some point, very briefly, and then crashed way below. On this cycle, looks like we're now in our 3rd contractionary period that ESD has gone through, it has been a little more gradual, but we do have this kind of lockup that didn't exist in previous cycles. And
Mm.
so maybe further drop is going to come. We don't know. I guess by the time people watch this, they'll know how it played out. But yeah, so when it goes below, what happens is you start issuing debt. The protocol starts kind of having debt.
Mm-hmm.
And what you can do as a user is you can buy that debt in the form of coupons.
Mm-hmm.
And there's a formula that basically says like the more debt there is, the greater discount you get on the coupons. And these coupons, there's been some debates, should they really be called coupons? Should they be called bonds? Should they be called these kind of exotic instruments? You can basically burn ESD to get 1.1, 1.2, 1.3 ESD worth of coupons, right?
Okay.
Capping up to, I think it's like a 50% discount that you can eventually get. However, that comes with significant risk. And the risk is within a 30-day period, if the price doesn't go back up over $1 and stay over $1 sufficiently long to create enough inflation to redeem all of those coupons, it's currently first come, first serve on the coupon redemption. And so if you're at the back end of that, or not enough happens, or if it never gets over, then that expires worthless. Mm-hmm. And so the nice thing there, in my perspective, is it has this kind of risk reward piece to it, where people can decide, do I want to try to get more ESD, take a bonus by taking this risk? And ideally, if they're doing that, they're also then buying ESD off the market to do that.
If you want to live a bankless life, you need to get a hardware wallet. There is no alternative for storing your crypto in a self-sovereign fashion. That's why I have 4 ledgers that I use to manage my different crypto assets, using the Ledger Live account as well. Ledger Live is like your home base for managing your Ethereum, DeFi, and crypto accounts. It does a really good job of aggregating all of your different Ethereum wallets if you are the type of person that uses more than one. But you can also add other cryptocurrencies like Bitcoin or Cosmos or whatever your preferred blockchain is. And then it will display an aggregate portfolio of all your accounts at the main page. One thing that Ledger is doing a really good job of is enabling all the money verbs that me and Ryan talked about with the Bankless Skill Cube enabled in the Ledger Live app. So right now in the Ledger Live app, you can buy, sell, lend, swap, and stake your crypto assets, which is doing a really good job of fulfilling all of the money verbs in the Bankless Skill Cube. Something that's new to Ledger Live is Ledger Swap, where you can swap assets one for another directly inside the Ledger Live application, ensuring trustlessness in your financial activity on Ethereum and on Bitcoin. If you want to learn more about what you can do with a ledger, go to the blog post, The Power of Ledger Live, on the Ledger website, where they share some of the more advanced things that you can do with your ledger that you might not have known about. There's a link in the show notes that will take you to the Ledger shop where you can get your preferred Ledger hardware wallets. I personally like the Ledger Nano X, but I also have both. They're both great options. When you own a ledger, you own your own assets in the way that they have been designed to be held by the user and the user alone. So go get your ledger today to make sure that you are as self-sovereign as possible. The Bankless State of the Nations are brought to you by YEARN. YEARN is DeFi's first self-building, community-run project, which I just get really, really excited about. YEARN is a system that seeks out yield in DeFi, and it does that in a number of different ways. A very aggressive way is with the vaults, where you can deposit your preferred asset of choice, and different DeFi experts will come in and generate a strategy for what to do with your deposited token, right? And so it'll go find ways to get yield in that deposited token in DeFi. For those who want to just earn yield on their stablecoins, the Earn system is for you, where you can deposit your preferred stablecoin, and YEARN will go and figure out which money market on DeFi in DeFi is producing the best interest rate, whether it's DYDX, it's Compound, or Aave. It looks around DeFi to see where the yield is coming from, and it directs stablecoins automatically so you don't have to. Check them out at yearn.finance to get started, and also check out the stats page to see what other people are doing.
Buying ESD off the market to do that, because ESD is trading, currently it's trading at, 88 cents. And so you could buy ESD for 88 cents and then get whatever the current premium is by burning that to get coupons. And therefore you're both pushing the price back closer to $1 and making it more likely they'll be able to redeem.
Right.
If
Double
existing ESD holders though don't buy net new ESD off the market, and they just all they want to do is capture that premium, that's a very risky play, because they're assuming somebody else is going to choose to actually buy ESD and push the price back up. And if that doesn't happen, it's just going to expire. And so ultimately, there's talk about evolving towards a V2. Scott Lewis and Will Price put forth a proposal for what a V2 might look like, and there's been a lot of discussion around it. And it involves actually kind of more or less doing away with the coupon system, replacing it with something that looks a lot more like zero coupon bonds. So maybe it will evolve that direction. But if coupons expire, that's the way to contract. And contract the supply. But with the bond system, that won't really happen. It'll kind of push it out. But I think it is interesting. It's another way to handle this. And what's nice is, versus something like Ample, both the current methodology and the methodology that's being suggested by Scott and Will, if you just believe in ESD and want to use it as a stable coin, and don't want to take on risk of expiry, then the number of units in your wallet isn't just going to change.
Right.
The price may fluctuate, but the number of units is not going to change. And so I think psychologically that's really helpful. And ultimately, if this is going to succeed as an uncollateralized or potentially under collateralized, if this kind of backstop gets in place, stablecoin is going to work in the future. That's great, right? You need people to actually use this as money. If they don't, then we're all just playing stupid games. And I think it's fine for people to be playing games and, testing the boundaries of these mechanisms early on. I think we're currently at around 131 million tokens is the supply. And so, if it were perfectly pegged to a dollar, it would be $131 million market cap currently.
Right.
And
not insignificant. That's pretty
not insignificant, right? That's pretty big. It's grown fast. I've been concerned about how fast it's grown because, again, the early folks who've been in there have not been focused on shilling it. They've been really focused on governance and trying to build this up and grow it slowly. And so I'm really optimistic that the ethos of the community is being built and continued in such a way where everyone's saying, look, we understand that there is massive potential for this if it can get to, multi-billion-dollar market cap and be holding the peg, right? Nobody wants to pump up to hundreds of millions of dollars or billions of dollars just to watch it crash. The whole point is, can we have something that is exceptionally 10x or more capital efficient than something like Maker and still holds a very tight peg? Because if you do, that just unlocks so much in DeFi, and you don't have also risk, right? I think there's a lot of hardcore people in the Ethereum community who are big fans of Maker, but vehemently disagreed with their decision to add some of these kind of centralized, centrally issued assets, right? And
also have such a large percentage of the deposits of the overall system be that as well.
Exactly. And so, that's where the Maker community has decided to go, and that's fine. But there are certainly people I think who are looking for something else. And if you get to a much, much more capital efficient something else, then great. And Hasib from Dragonfly Capital wrote a piece a couple of years ago that really helped me wrap my head around the different stablecoin models. And he talked about how there's this kind of fiat collateralized, there's crypto collateralized, which needs to end up being over collateralized, right? And then there's this uncollateralized version, the algorithmic stablecoin, which we haven't really seen a viable attempt at that before, right?
But people just theorize that this is a design possibility.
Yeah, there was BitShares and stuff way back in the day, but it was on some random chain nobody used. There wasn't this DeFi ecosystem or anything around it.
Wasn't BitShares over collateralized? I thought that was the precursor to the Maker model.
They may have been, yeah, but so I could be but my understanding is there were some attempts, at least theorized towards this direction. We're now at a stage though where DeFi has reached this kind of ecosystem scale where I think we can actually attempt some things like this, and it very well will fail, right? I don't want anyone to listen to this conversation and be like, oh my god, this is the next Maker or something, and be like, I need to no, like
Mm-hmm.
this will probably not be the next Maker. This will probably never achieve the scale that Maker does. I
Mm-hmm.
think there is a possibility that it goes far beyond that, but there's so much that's unknown at this point. There are so
Mm-hmm.
many technical dependencies, economic dependencies, community dependencies. Like
Right.
we just don't know.
Mm-hmm.
But the quality of the conversations happening and the way that the system has performed through the first two cycles that it's gone through make me really intrigued and spending more time with it. So, you know, it's, you know, we're excited to be invested in this as a firm and to be, you know, actively participating in the discussions that are happening and to hopefully, you know, see this become the success that it has the potential to be, but is far from certain.
Let's hammer on the over collateralization versus first, you know, capital efficient dynamic.
Yeah.
Because when I go and I buy one DAI off the market versus an empty set dollar, like that doesn't cost me any other capital other than the dollar to buy the unit, right? But so the capital intensivity comes in the production of the unit, right? So MakerDAO requires, if we're talking about Ether, it requires 50% over collateralization, and that's just the bare minimum, right? So like the system at large, I think is over collateralized by like 300+%. So it takes $3 worth of value to produce $1 worth of DAI. Can you explain the difference in dynamics between that and what is at empty set dollar and how that is theorized to be different at maturity?
Yeah. So if you think about in a case where DAI is over the peg, right? As we've seen on a relatively persistent basis, it's been really hard to bring it back down to the peg, right? Because you need people to lock up at least as much value, if not more, and be selling it and do it. And there's not a great way to arbitrage it, right? Like for USDC and USDT and things like that, while they are very centralized, it's really easy for professional traders to arb them, right? If they have an account with somebody, with one of these firms that can kind of mint and redeem, the arb is super fast and super efficient. With Maker, it's really hard, right? We've seen even in the Maker forums in recent days, you know, Cyrus Unesi, who used to be on the risk team, arguing with a bunch of the community members about what the appropriate approach should be to bringing it down. And it's really hard. Right. The mechanism for Maker makes it really hard to respond because it's hard to arb because of the capital intensivity. With empty set dollar, if it's above the peg, there is no net new capital that needs to come into the system in order to bring it down. Right. More will be issued and the current holders can have the same number of units, sell the additional units, and you know, assuming through the AMM, wherever there's gonna be some buyers, whatever, but it's gonna push the price down. But there's no really a large amount of new capital that needs to come into the system in order to cause it to fall back down to the peg, and you know, to grow the supply, right? Even USDC, one new USDC in circulation is $1 US that was deposited into a bank account somewhere. With ESD, it doesn't necessarily mean that, right? You can there's more just issued by the protocol itself, expanding to meet demand for more.
So that's always one of what I thought the elegant side of MakerDAO is versus something like Compound or Aave, where like there's no limit to how much DAI you can mint. Like, yes, there's the ceiling, the debt ceiling, but we can also just raise that, right? So it's really the MakerDAO system is able to produce unlimited amounts of DAI for any person that wants to do that. But somebody has to want to do that, right? Like there needs to be that much capital to do that. If you have the desire, you can have the ability. But that's constrained by capital. With empty set dollar, the protocol similarly has no constraints on how many units it can produce, right? It's that producing a unit costs nothing. It costs gas.
Yeah.
And so there is zero capital intensivity with pushing the price down. But I'm guessing there is some amount of capital intensivity with pushing the price up. Is that correct?
Yeah. And I think that's one of the things is you know, right now, because it's early, it started from zero literally, and now to a supply of 131 million, right? There has to be new people actually demanding to buy it, right? Because if they don't, then it's not going to keep the peg to the dollar at all, or peg to anything, right? And the idea is that hopefully it's able to grow without the new issuance being matched 1-to-1 for a dollar. But pushing it back up, it requires more capital to come in. I think it really depends on the float, right? How much is actually out there, like on the market, looking to be sold versus looking to be bought. And so, you could potentially push it back up with relatively little amount of capital if the demand is relatively close to where the market cap is. If it's not, then it goes down. You need a lot more capital to push it back up.
Right. You need the buying pressure.
And so I think, that's really the thing that I think is the hard thing to figure out, right? As you stated, it's pretty easy to understand. The price is above, you print more, that helps bring the price down, right? And it's on the contraction side where it's below the peg. How do you get it back up? That's very challenging. And in my view, a lot of it comes down to faith and belief, right? The one of the reasons the dollar works is because people believe in the dollar, right? And that's money generally is based around belief. And so people need to have mechanisms that work. And the thing is about these mechanisms, the more people believe they work, the more likely they are to work. And we can't just like be delusional and just be like, yes,
we can meme it.
We believe that we believe we're going to meme it. We believe that these mechanisms will work, even though there's no basis in reality. So I think this is one of those things that, I think, certainly in the Bitcoin community and increasingly in the Ethereum community, people talk about like Lindy effect, right? It's like the longer that's been around and the longer it survived, the longer it's likely to. And I think this has some of those characteristics. It's nowhere near the level of Bitcoin or Ethereum right now. But I think the idea is, should it ever have that type of longevity in a functional mode, then it should start to develop that, and people will start to have the same way they do with Maker, right? One of the things that helps DAI keep the peg is the belief that DAI will keep the peg and the mechanisms will work. Backed by the collateral gives a very good reason to believe that. So the threshold for belief is much higher with something like empty set dollar, because you don't see a pile of collateral sitting there that you reasonably believe is, backing this. So it's harder to get there, but if you can, it's much more efficient.
Yeah. And we've seen this belief mechanism play out at the largest of scales. I was reading a Money by Jacob Goldstein, who's the host of the NPR Planet Money podcast. And he was telling a story of how, I can't remember what crisis. It was the Euro crisis. And it was something about the Euro. And the person who was behind the central bank went out and gave a speech and said, like, we're going to fix, it was basically a speech about how we're going to fix the peg, except it was in different terms. And the central banker was like, we are going to do whatever it takes. And that broadcasted across the Europe. And as a result of that broadcast, the financial crisis at the time stopped, because people believed his words, that they were going to do whatever it took to print enough euros to satisfy the demand. And so then that's what stopped the crisis, right? It's the belief front ran the market. One thing I want to ask about is the ease at printing the units seems to be dangerous, because it's easy to print units. You can print yourself into a hole where, like, all of a sudden we've printed ourselves into a billion units. And there's not going to be enough capital to backstop it if the faith crashes. Have you thought about 100%. This? Sounds like you've thought about this.
I've been very concerned about that. Some of the other community members give me a hard time because they think I've been overly concerned about that. There actually, is this what this is our? I guess this is the third cycle that ESD will be going through. But the first cycle was when the community was very, very, very small, like probably less than 100 people involved. The next cycle though was timed. Initially, the expansion was happening where it was capped at 10% per epoch, and the epochs were every 8 hours. So you were we were in a position where we were inflating. Yeah, it was like 30% a day, right? Type of situation, right? Like, that's insane, right? Like,
and that's making big commitments,
right?
Writing checks you might not be able to cash.
Exactly. It's like it's growing from a very, very small base, but still, that's an insane rate of growth. And I was like, you know what? Some other people are also other, but I think I was probably the one pounding the table hardest. Was like, guys, let's cap it at like max 3%, right? That's still like 9% a day potential. And some people were convinced because that like 98% of voters of votes like went saying yes, let's lower it to 3%. But it was right as that like passed that then the price like went and crashed below $1. People were like, oh, you see, I told you so. It was because this doesn't work because people needed higher returns. And my thinking is like, no, it's because we were inflating way faster than the demand was growing. This may have been like
this could have been way worse.
Interesting kind of like point where everyone kind of it was like a kind of Keynesian beauty contest around this where people were looking at like, oh, I guess this is going to be the point that we all agree is like where it's going to come back down. But still, it was too fast. I think even 1% every 8 hours would be way too fast. 0.5% is probably too much. And so there needs to be some further discussion in the community to figure out, like, well, how do we do the right regulation so that it can grow? And because I talked about this with some other members of the community, and one of them who I talked to a lot, he's very worried. I don't want to call him out by name, but he's more worried about price deviating from $1. I'm more worried about the supply massively overextending. And we both see each other's point, right? Like if it's supposed to be a stable coin, if there's massive demand, it starts trading for like $2 or $3, like that doesn't look good.
That's not a stable coin.
At the same time, like I don't want us to like inflate up and see like that there's like, 1 billion ESD in circulation and there's like, $20 million of actual demand for it, right? That would be equally unhealthy. But you can't control both, right? Because it's a permissionless system. People who want it will buy it. People want to sell it will sell it. And you can only control one of the two. And so,
and especially when DeFi moves, so fast, like the demand that you are experiencing one day could be gone the next day. And especially with a system that isn't collateralized, that's really important because that means a lot of the security of the system is held in the social layer.
Exactly. Right. There's so much that's in the social layer here. But I think what part of the I don't know if this is a formal design goal, but it's certainly been talked about a lot in the community, is basically how governance heavy should this be? And I think the consensus that I see is that it should generally, the attempt should be to be relatively minimal governance in the long term. It's early. There's a lot that we don't know that doesn't work. Governance needs to be pretty active, but long term, the goal should be to say like, okay, here's more or less the rules. If things seem like they're breaking, maybe there needs to be a governance action to tweak them. But ideally, it should be kind of a self-regulating system. Very much inspired by Reflexer Labs with Rye and what they're doing. I think is very cool. They've got essentially a little bit more freedom in their design space because they're not trying to stay pegged to $1 specifically, right? It's kind of like a low volatility like Reflexer bond. Yeah, so that's super cool. I love what they're doing over there. This is harder because it is trying to stay pegged to the dollar, but the goal is to kind of figure out the right control theory and control mechanisms that it can try to stabilize around that level with minimum manual intervention. Because as we know, and as I think people in the crypto community are very, very familiar with, like when you try to twiddle with the knobs, it's really easy to do a lot more damage than you intend to do good and you end up doing damage. And so I think right now there's like no avoiding it. Like twiddling is needed if the system were allowed to run as is, without any governance action by anybody. Like it seems pretty low likelihood that this would succeed. So, token holders will vote and they will make changes. But long term, in my view, and what I've seen from many others, is that hopefully that becomes minimized.
So one final question to tie this off is, how do token holders vote? Is that one empty set dollar is one vote? Is that how this works?
More or less. The way it works is you have to actually have that empty set dollar bonded in the DAO. And right now also there's essentially a 15 period lockup on bonding and unbonding. And so that means like you're stuck in there for minimum 5 days or longer. So you kind of have to be relatively committed to the system. If you're like, you might like run for the exit right away. That doesn't work well. And so I think that's healthy, right? You want people voting, making decisions who are going to be in it for, it's hard to say 5 days is the long haul, but you want people who are committed more than block by block,
Right.
if they're going to be participating in the vote.
And are they compensated for their votes?
No, they're compensated in the form of, you know, if you want this to work, then you better participate. So yeah, I'm sure there's some people who are like free riding there and not participating, but, you know, I think we have seen a lot of governance action. The quorum, I think someone just put up, Will Price, I think just put up a proposal to lower the quorum and proposal threshold, because they've been very high relative to other protocols. I think 1%, pretty typical for making a proposal. But there hasn't been like that delegation ability that we see in the compound alpha governor that everyone's adopted. But it was like a 33% voting quorum, which is insanely high, right? Like compound does like 4%, right? And we've been luckily able to clear that. I don't think anything's failed by not being able to clear that. But I think especially as ownership continues to be dispersed among more and more hands, it's gonna be harder and harder to hit that, and I think that poses a real risk to the protocol. So I'm glad that proposal has been made, and hopefully, in my view, that it will pass. But yeah, you know, right now, if you want this to work, you gotta put in the legwork and help make sure that the community and the protocol are on the best standing possible.
Well, with people like you, Dan, behind the project, as well as Will Price and Scott Lewis, that is a pretty rock star team. So I am definitely going to be paying attention.
To be clear, this not this like
community
members, right?
Yeah,
it's like there we go. But and not to. I mean, I meant to those folks because I know them. They put together this recent proposal, but I wouldn't even say they're necessarily the most active members of the community. There's a lot of really strong contributors in there on both a kind of technical and governance level, and so you know the level of discourse has been incredibly high compared to pretty much any other forum I've been a part of.
Well, a vibrant community builds vibrant projects. So I'm optimistic about the future. So Dan, do you know where people could go to if they wanted to learn more or maybe participate in governance and discussion?
Yeah, if you go to, I think the website, the IPFS is hosted at like emptyset.finance. I think at the bottom there's a link to the Discord. There's also an analytics site, esd.tools, and that's also got links to Twitter, Discord, Telegram. There's also a governance forum, which I think is emptyset.xyz, something like that.
I'll get those all in the show notes.
Yeah, it's you can give them the show notes. Some people can find, but you know, there's some good conversation. So I encourage people to jump in and look. Like, you know, please don't just like ape in, like right or like if you think you're aping, just don't. Like, like do the work because again, right? Because yeah, right, exactly right. But there is relatively high complexity to participating in the system. You know, relative to even some like a lot of other DeFi projects, and so it is something where if people want to participate, I encourage them to really do their diligence, and decide if they think this makes sense. Because I said a lot of very new, very unproven things, and so. Very, very high risk environment.
And what about Nascent? Where can people find out more about Nascent or perhaps even reach out to you guys?
Yeah, so nascent.xyz is our website. You can follow us at nascentxyz on Twitter. I'm on Twitter at Elitzer, and you know you can find us there. Shoot us a DM, email at hello@nascent.xyz. We'd love to talk to teams and builders who are doing awesome stuff in the space.
Awesome. Thanks, Dan, for coming and showcasing both Nascent and Ready Set Dollar to the nation. I appreciate it.
Thanks, David. Appreciate it.